welcome back. Well, oil prices eased today ahead of the resumption of indirect talks between the United States and Iran, which may revive a nuclear deal that could lead to the removal of sanctions on Iranian oil sales, increasing global supplies. Brent crude was down 40 cents at $92.55 a barrel after hitting a 7-year high of 94 yesterday. U.S. West Texas Intermediate crude was also down by a cent to $91.31 a barrel. Both oil contracts have touched recent 7-year tops, supported by strong global demand, ongoing tensions in Eastern Europe, and potential supply disruptions because of cold in the U.S. Talks on reviving the 2015 Iranian nuclear deal, which are taking place in Vienna today after a 10-day pause, and the United States has restored some sanctions waivers, while Iran is demanding a full removal of sanctions and a U.S. guarantee of no further punitive steps. Well, the ease in oil prices, however, could be temporary, while optimism over the U.S.-Iran talks spurred some profit-taking. The price weakness will likely be short-lived as the oil market remains in a supply deficit. Well, to help us connect this to the Nigerian economy, we have Bolanle Agbaje. She's analyst with Financial Derivatives Company, and she joins us to talk about this. Good morning, Bolanle. Good to have you.
Good morning.
So we saw the price go from 94 yesterday to 92. You know, it's such, within how many hours? Yes. We have such a movement.
Yeah, so just the talks about, what the U.S. government would actually do regarding the sanctions on Iran brought the prices down temporarily, but I don't think it would be a lasting impact on the prices, because we do have this supply deficit that's still lingering there. And even if, Iran starts to produce oil, or their supply hits the market, I don't think it's enough to close that supply-demand gap.
So this demand is because of the ease of restrictions, return of activities after COVID?
And also the weather.
Yes,
we're experiencing very harsh winters in majority of, the other countries in the world, and that has obviously increased the demand for oil. And also the fact that, oil plays into our daily lives. We fuel our cars, we, use oil to generate heating and all of that. So that has definitely increased the demand for oil. And also the fact that, OPEC is still trying to ramp up supply, but it's still just not enough, and definitely we've been plagued by supply disruptions for the past 2 years now, and I think the oil market has also been affected by
its
this.
Own share.
Yes.
So we see the price of oil, it might hit 100 very soon.
And we're very optimistic. Like if you asked us a few months ago, we're not so optimistic about that, but it seems like it's getting there. And I think the last time that happened was in 2014, so it's great. It's also great for Nigeria, because right now we're looking to, build up our reserves. We need a lot of funding, to fund the next year's budget. And, those are the positives that we could get from it.
Yeah, but unfortunately, I mean, our reserve is down. Now it's even below the $40 billion.
Yes. And also what's conflicting is the fact that, the parallel market rate has also depreciated, not significantly, but marginally as well. But so it calls question, what exactly are we doing with our reserves at the moment? But the decline is not so much. It's something that, I guess that the central bank is also looking for ways to, build these reserves.
But which are the ways? I mean, we have the oil. I mean, this is a great one. This should be a great time for Nigeria, but we are not even meeting up with our quota.
Yeah, well, I think they're putting initiatives out there. The last one I recently saw is loans that they're giving to, manufacturers that, they're targeting manufacturers that are investing.
Is it the 100 for 100?
Yes, investing in particular products that we can actually export out of the country. So it's more or less like a longer term, initiative, but I think they're trying what they can do at the moment to, invest in building our reserves in the future.
Yeah, and then the other side of the story is that with the surge in oil prices is an increase in our subsidy, right?
Well, yes, but like the IMF mentioned last year in November, they actually stressed on the fact that we need to remove this.
Yeah, they said it again, I think, yesterday.
Yes, they just because of the petrol scarcity that we're seeing at the moment, they've stressed the fact that the only way to solve this is to remove the subsidy, considering the fact that the government is actually struggling to pay the subsidies, and also the fact that the oil market would actually benefit from a market-based price mechanism, in the sense that with what is going on now, you have the fact that, some people have mentioned the fact that there's bad fuel in the market and all of that. The immediate response would, in ordinary terms, would have been for most of these oil marketers to increase their prices. So once they do that, they can actually regulate how, they adjust their supply within the market. And what then happens? People can still, see this fuel to buy, but just at a higher price. And that would, reduce the queues that we're seeing at the moment. But when you have a situation where they can't actually increase their price, and then they're hoping that, some subsidy payout actually comes into, some of their businesses, they would have definitely, go into hoarding some of the supply that they have and causing disruption in the market.
And here we are hoping that inflation will taper. But I mean, with this petrol, with the queues and hike in transport fare,
costs,
food inflation,
that the trajectory for inflation will definitely be going up from now. And that has already even started from the month of December.
Wow. And we're hoping that, by the time we get the inflation figure for January, it should have tapered. Since, I know that the one for December was connected to hike in demand because of the festive period.
Yes.
So January should taper.
It should, but with what's going on now, with the fact that, incomes are squeezed and all of that, I don't think our reports will definitely be out soon. We're still focusing on, trying to analyze what the inflation numbers would actually be.
And while you guys are putting that together, do we see any, we've talked a lot about the basket of commodities used to measure inflation, making it more realistic for today.
Yes. Well, as of today, some of these commodity prices have remained flat. For the month of January, we saw small hikes, upwards, downwards with some of the commodities. But as for today, the only price hike that we're seeing in the market would be the price of flour, and it's just marginal. And then you've seen, some decline in prices of like the gari and whatnot. But some of these commodities have remained flat. So that's good. But the fact that, we're still having the security issues, prices have not necessarily gone down to pre-pandemic levels. And that's...
Can they go back to pre-pandemic?
They definitely can if we actually focus on ramping up supply. What would happen is the market would actually adjust itself. In a case where you have an abundance of, say, gari in the market, it makes no sense for any, seller to increase the price of gari, because they will more or less go to the next person that is supplying. That's how the market works. And that's why most economists actually allow the market to control the price of, many goods in the market.
And, mentioning gari just reminds me, I know this was not part of it. Have you bought eggs recently?
Yeah.
I tried it recently and I was shocked.
Yes.
A piece of egg was sold is 18 naira.
Yes, yes. A crate goes for about 2,300 to 2,500 now. I could see it because I buy a crate of eggs almost every 2 weeks, and I could see the price, increasing. And
and I normally would buy a crate, but I tried to buy one and I was told it's 18 naira.
Yes.
And they said it's maize. We go back to the feed mill.
Yes. It's not, it's not a good situation that we're being faced with. But I think, as time goes by and as the economy adjusts, back to where it was, I think most of these prices would actually decline. I think for the price of egg, most of these, sellers are focusing on the fact that they don't have incomes in their pocket. Some of them are trying to, gain as much profit as they can. And, people are buying eggs.
But I was told that, some people are importing maize now to make the feed mill. That's also feeding into the price.
Yes, so the price of the dollar as well has also played into it, which plays into majority of the commodities in the market anyways, because we're heavily dependent on, imports for all these particular raw materials.
Yeah, well, we're talking about squeezed liquidity now. Have we started seeing reactions to the taxing of income tax on treasury bills?
Yes, we're seeing some reactions, but in particular, we know that, most of these corporates are going to, face it in the sense that some of their profit after tax is going to take a beating when it comes to, the funds that they would have left when they start paying this tax. I understand that the government is looking for ways to generate revenue, and this is obviously some of the measures. But in a case where you have an economy that is booming and growing as it should, I don't think this kind of policy should be a problem. But the fact that, a lot of companies are struggling at the moment, you have the fact that, dollar has increased their cost significantly. You have the fuel that we've just talked about. And then now, the increased tax is going to be a struggling time for
Yeah,
most
because, I mean, some
companies.
people are even saying to feed into the issue of employment.
Yes.
If corporates are squeezed, then they want to reduce their overhead costs.
Exactly.
Even the tax they'll be paying also reduce production.
It's literally the negative multiplier that would play in off from this. But we do hope that the reaction shouldn't be as drastic as, what we're thinking in our head.
Let's just try to be optimistic.
Yes.
What else
But it's also good for the government as well.
Yes, it is good for the government, but we're just talking of, the spillover effect that we could see. What else is happening in the commodity space?
Well, in commodity space, prices, global commodity space, most prices are high. Like in part, we've talked about the fact that, battery prices have also increased significantly just because the raw materials have increased. Like
the emphasis on increase.
The price of lithium, for example, has more than doubled. It has increased by about 569% in the past 2 years. The price of
what's driving that?
Well, they've claimed that, supply disruptions and the fact that, to create a new mine China is one of the biggest producers, but to create a new mine takes about 7 to 10 years. So now that supply is quite squeezed, and the fact that, there's increased demand for the production of electric cars and all of that. And the funny thing about it is we're trying to replace some of these fuel gasoline cars with the electric cars. And then here you now have the price of batteries, the raw materials actually increasing. And this is like the biggest increase in the past 10 years. Wow. The last time, prices were close to this level was in 2010. So from 2020 up until now, we had seen the price of these raw materials, lithium, nickel, decline significantly. And now, all of a sudden,
payback time. All right, Bolale, we have to stop it there. Thank you so much. It was a pleasure having this conversation with you. Thank you for coming and enjoy the rest of your day.
Thank you for having me.
So now let's do an opening call to the market. We have Will Ebong to give us details of how the market went yesterday. Okay, just before Will comes on, we'll just take a breather and we'll be right back.